Have you ever wondered how your finances stack up to the average person? What's the average amount others have saved for retirement? How does your income compare to what others make in a year? And what about your spending? Taking a look at these figures will give you further insight into your situation. They can help gauge whether you're ahead of the average person financially. Pay attention because some of these stats might surprise you. When you go to work for your paycheck, do you think you earn more or less than the average worker? According to the U.S. Department of Labor Statistics, the median income for a full-time worker was $1,041 per week, or approximately $52,000 per year, based on a 40-hour work week. This equates to about $26 per hour, before tax, of course. Now, this income figure is strictly for an individual, not household income, which includes the total income of all members living in a home, including spouses and their dependents. According to the most recent Federal Reserve data, the median amount saved for retirement among all adults was $65,000. This amount considers all age groups, but only includes those who have retirement accounts at all. About one-fourth of Americans don't even have one. If someone retired with this amount, using a 4% safe withdrawal rate, it would only produce about $2,600 per year in income. For those aged 25 and younger, the median retirement account balance was $1,786. The 25 to 34 age group had a median balance of just over $14,000. This figure rose to almost $88,000 for those aged 65 and older. These low amounts are alarming. The average household probably needs $500,000 or more, in addition to other income streams to retire comfortably. Just saving a small percentage of your paycheck and investing it consistently could put you in a much better position than the average person your age. When it comes to retirement savings, the Social Security Administration says the average benefit amount is $1,550 per month. Many Americans rely on Social Security as their only retirement income, and for most who have nothing else saved, it will need to be supplemented with income from a job. Keep in mind, $1,550 per month is just the average payment. Those who earned less during their working years will likely receive even less. Some people prepare for retirement without considering Social Security at all and just see it as a bonus. Additionally, the benefit amount will vary based on when you choose to start collecting. Most people can estimate their benefit based on past earnings on the Social Security Administration's website. On average, U.S. households spend about $5,577 per month, as noted by the U.S. Department of Labor Statistics. Annually, that's roughly $67,000, meaning you'd need to take home that much each year to meet these expenses. This figure includes everything from housing and transportation to food, categories that take up a large percentage of the average budget. To break it down, the average household spends about $1,885 per month on housing, equating to 34% of total spending. Food costs $691 per month, and transportation is around $913 per month. Credit scores vary widely, from as low as 300 to as high as 850. The average FICO score, according to Experian, is surprisingly high at 715. Despite some people downplaying the need for a good credit score, it's beneficial to maintain a respectable number. A credit score impacts the mortgage rate you'd receive for a home, the terms on a car loan, and other low-interest debt options. Thankfully, maintaining a high credit score is simple if you pay your bills on time. Experience states that payment history is the main factor, followed by your credit utilization ratio, credit history length, types of credit, and new credit. WalletHub reports that the average household has $9,260 in credit card debt, one of the most costly types of debt. With interest rates often between 15% and 25%, paying off credit card debt is crucial, as this interest far outweighs typical stock market returns. Credit cards can encourage wasteful spending, leading to debt for non-essential items like clothes, electronics, or online purchases that hold little value. To avoid credit card debt, try to pay your balances in full every month. Only buy what you can afford or stick to a debit card. Tracking your net worth can also help you see progress over time. Net worth is a great measure of financial well-being. and can highlight strengths or weaknesses in your finances. Calculate net worth by totaling the value of what you own, such as your home, vehicles, and retirement accounts, and subtracting everything you owe, like a mortgage. Surprisingly, the median net worth for U.S. households is about $122,000, according to the Federal Reserve. For those under age 35, the median net worth is less than $14,000, while for the 35 to 44 age group, it's around $91,000. Those aged 45 to 54 have a median of $168,000. 55 to 64 have $212,000, and 65 to 74 have $266,000. These net worth figures can be exceeded with reasonable income and financial discipline. The amount of income the average person saves can vary yearly based on the economy and other factors. Data from the U.S. Bureau of Economic Analysis shows an average savings rate of about 6%, meaning people save 6% of their after-tax income. While this savings rate may cover short and medium-term goals like a home purchase or renovation, experts suggest saving at least 10 to 15% for retirement alone. This percentage should be higher if your goal is early retirement, as other expenses also require savings. Everyone wants to retire early to enjoy more free time, but according to Ramsey Solutions, the average retirement age is 61. Many can't collect full Social Security benefits until 67. For additional context, someone reaching age 65 may live another 19 to 21.5 years, according to the Social Security Administration. For those starting to invest early, 4 decades of compound interest provide ample opportunity for growth. Yet, retiring at 61 leaves the question of whether it allows enough years to enjoy life fully. It's hard to gain a clear perspective on your finances, and sometimes it feels like you're falling short of your goals. Reviewing these financial statistics could surprise you, showing how you compare to the average person and providing momentum to keep improving